Hey y'all, I need to dispel a myth about the Fed rate cuts, and it's a conversation I've had with a few of my realtor partners recently and having to explain the same thing to them, so I may as well put it out there for everybody to hear, right? The myth is that a Fed rate cut is going to bring down mortgage rates. And the fact is, Fed rate cut is not going to bring down mortgage rates. In fact, be careful what you wish for, because a lot of times that Fed rate cut actually increases rates a little bit. As we saw in 2024, third quarter and fourth quarter, the Fed lowered the federal funds rate 3 times for a total of 1 point. And what did mortgage rates do? Did they go down? No, they did not go down. They went up. And the same thing could happen again, because what we need is not a Fed rate cut. We need more investors to buy mortgage-backed bonds, long-term bonds on Wall Street, because that's what brings down mortgage rates, not Fed rate cuts. When rates dropped down to crazy lows in 2020, 2021, that was only because the Fed became the largest buyer of mortgage bonds on Wall Street when none of the investors wanted to buy them because of the economic shutdown that we were experiencing from COVID. And then when the Fed decided to stop buying mortgage bonds, that's when rates started going up in 2022. See, that is what controls mortgage rates, the buyers of bonds on Wall Street, not the Fed rate cuts. So the Fed rate cut, it will help with home equity lines of credit, it will help with car loans, it will help with credit card rates, but it has a very, very indirect effect on mortgage rates. Sometimes that effect is the opposite of what we're hoping for. So be careful what you wish for. Yes, there's going to be a Fed rate coming soon. It's not going to be this, obviously, last month, and it probably isn't going to be the end of this month, although it's possible, it's not likely. We're probably looking at later in the year before we even see something, and hopefully that will send a signal to the investors on Wall Street that it's time to start buying more mortgage bonds and U.S. Treasuries, the long-term bonds, not the short-term ones. So the FYI for you, careful what you wish for.